welcome. Welcome. Close out this. All right, this is study session. This is study session 2 of the managing We're working on managing in a global business environment. WGU's D080. Goal for tonight is keep studying with the help of ChatGPT version 5. Kind of scrambling, going through all the practice questions, using ChatGPT as a practice assessment coach, refining my education process throughout. The goal by today's stream and today's study session is to really start hitting home the major principles of all the different competencies I have to cover for this upcoming exam tomorrow. The competencies that I'm expected to showcase for this course are as follows. We have to understand globalization and major parts of that. Legal and ethical considerations for globalization, business strategies, global business practices, and technologies and trends in the global business environment. So those are the kind of core areas. This is let's turn on study mode. Okay, I'm going to pause. I'm going to go here so I can log in. Okay. All right, I'm back. Ow. Oh. All right. Okay. So, starting with question 3, what are the 4 factors in Jimawat's cage analysis? A, you have culture, agriculture, geography, and environment. B, culture, administration, geography, and environment. C, culture, agriculture, government, and economy. And did I just read that? Culture, administration, geography, and economy. I don't know why I said environment. And then D, culture, administration, government, environment. Okay, so let's break this down. So you have the acronym CAGE. So you have C, A, G, and an E. Not knowing what any of this means, this is part of the globalization kind of first intro portions for this competency. So looking at the answers, we can do one of techniques. I can, if I had memorized this or read the material, I would be able to quickly just kind of spit this one out, but I'm not quite sure. So we're just going to kind of work backwards. So A, B, C, and D all have for the acronym C for culture. So obviously it incorporates that. Then there is a split. A and C have agriculture, and B and D both have administration. 2 have geography, 2 have government. So you have an agriculture government, administration, geography, agriculture, geography. So it's kind of showing the branches of how it's splitting. So you have one splitting to two, splitting to two more, splitting to two more after that. And then you have environment and economy, and so you have the same inclinations. So you have four different variations. Looking at this, I don't think agriculture will have an effect. If we're looking at the lens of global economies, yes, agriculture is a major societal function, but we're looking at just simply transactions within the economies at like of importing, exporting, and just transacting of all the goods. This analysis probably shouldn't be focusing on agriculture. And the same kind of goes with government as well. So I think this would be more of a actual thing that can be utilized across different things, and that just focuses on the idea I want to get across is the society that can be looked at and analyzed. So without knowing the flag, without knowing the time, you can look at the exact same thing. So I would say culture administration would be more likely. And then going into geography and environment. And why I say those, because I think for this, because it is a business and globalization class, I think economy or analyzing things in the economy is implied. So I don't think that's part of the analysis acronym. I think this is focusing on aspects of the analysis. So we want to pull out and be able to articulate and look at and find things that are measurable to analyze within the economy. And so those are things like culture, administration, geography, and environments. Like all those things can be what I'm thinking is those are like the backbones of an economy. So culture would be the underlying principles and the social cultures of societal. There's different things. Culture is just the way we behave as people. Administration would be the form at which the money transacts. So you have different forms. Like currently today you have, it's kind of 50-50 split. Not really 50-50 split, but you have two different sides of a modernist economy, which would be either a capitalist or communist. And those will be the administrative ways that an economy functions. And then you have the geographies, which is pretty self-explanatory. That's going to be where the actual, either the large scale area of the geographic area where that's at. So like geography is going to relate to you have a lot of different geographic things that you can do, and you can zoom in straight out, look at the globe, and then start looking at the larger land masses like the continents, and then you can zoom into the nations, to the state, to the city, to the actual urban area. Okay, so that's a large scale to small scale zooming in. And then environment's going to be slightly different. So yes, you have the geography of the area, which is going to be paired with the environment, which is going to also be a slightly different. Environmental aspects are key things like a seafaring environment's going to operate on an economy far different than that of a woodland mountainous economy. So that's how I kind of distilled and broke down all these principles. So ChatGPT, let me know how I did and give me your coaching critiques if I missed anything. Okay, so it's not environment. It was like, funny thing is when I mentioned environmental after I started talking about the geography, I was like, geography is actually very, very closely tied to environmental, so it's probably not need to be stated twice in this acronym. So I kind of backpedaled on it, but I also still at the same time committed to it. So, okay, so economic. So geographic would be the physical distances, borders, time zones, climate, transportation. So that would encapsulate everything that environment would. So it would get lumped into geographic. I had the right thinking. Economic would be differences in income, cost structure, human capital, and infrastructure. Got it. Now, economic would be kind of like a capitalistic and communistic, because I put administrative and I didn't think of government systems, trade agreements, colony ties, currencies. I went more of like how the capital moves. So I lumped in capitalism and communism into that factor of this analysis. But I guess I was kind of close, but I needed to actually focus more on the actual paper and the things that are doing the legalities, functions of the things that are actually created into paper to be binding legal practices fall into administrative. Is that correct? Question 19. Country A and B are trying to mend their relationship. A company from country A would like to invest in a company in country B. Which action by country B will help these two countries meet their goals? A, create protectionist policies. B, provide tax exemptions. C, provide limit privatization policies. And D, increase trade tariffs. Okay, so let's break down all the different answers. So we have two companies that want to invest in each other, and have opposing countries that are trying to mend the relationships. So what can be done? So given these specific requirements, let's discuss what they are and what their goal is hoping to achieve. Okay, so A is create protectionist policies. Protectionist policies are the process of shielding things. In another example that I was given and kind of worked with the framework for another question was, think something is new, like a newborn baby, or just a new entity in this nature, okay? And then you have experienced, older, more experienced, fully adult beings, okay? So when in a group, typically the older, more mature let the newer grow and develop, okay? So this is the nature of protectionist policies. You're putting a bubble of protection around the new, okay? So that's the goal. So that can be beneficial, but typically it's not residing about that doesn't solve and create amends between two opposing countries. That just protects a new business, a business entity, a trade, some kind of economy, a scale that's growing. For instance, in today's kind of global practices, two buzzwords that you would see often would be Bitcoin or cryptocurrencies and AI. Those are like the new nascent buzz technology forms that are new business practices and business trades and entities that are out there for the market, and people are creating money, pushing money into investing into, driving innovation, and it's the top runners of where the next wave of innovation is going to possibly be going. Okay, so competing countries are going to put around, if they believe in those technologies, they're going to want to invest heavy, open doors, and put protective bubbles so those things can grow and thrive. Okay, so that's protectionist or protectionism, essentially, in that form. Okay, so for this context question, I would say A is out. B, provide tax exemptions. This could be beneficial if two companies are trying to build amends and they have a companies within each country that wants to cooperate, providing tax exemptions for those companies to commingle would be beneficial. So company A gets a tax break for transacting with company B from the whatever a country of that origin. So that could be beneficial. So we'll keep that in mind. C, limit privatization policies. So privatization is kind of very similar kind of thing as talking about protectionism. So when you put policies, so we have create policies, limit policies. So privatization policies is like a form of legal action that governments take to essentially I'm going to wait for it to transcribe. Okay, so essentially governments are taking action to, if you want to limit privatization, okay, so the best thing I can think of is like think of a base of a pyramid. Okay, the base of the pyramid is fair and equal chance of competing. Okay, and then everyone's going after a prize. So everyone's going to start competing towards this point. Okay, so the nature of competing is losers going to fall out at the weaker points of this race. Okay, so what that leads is inevitably there's usually one coalescent of one top dog when given enough time of like competition. So this sets up the ability for monopolistic business practices. Typically, as an economy, especially in a capitalistic economy, we don't like monopolies, even though we do have them. And the reason is typically it doesn't vie for good business practices for everyone around. There's not enough fair distribution of competition, so there's no options. So if immoral or unethical or just not fair transacting practices happen, you have one entity and you have all these disputes have to go up one chain, versus an easy form factor is just have an economy where you have multiple options. So in case something doesn't work out, you have a competitor that keeps you in check. This is the checks and balances methodology. Okay, so why is privatization bad? It leads to monopolies. Okay, and privatization also falls into the option of owning your own stuff. Okay, so limiting it is you're trying to make sure there's less stuff that people can all singularly own under one corporation or one person and stuff like that. So these are legal actions to prevent these things. Now, increased trade tariffs. Now, trade tariffs is just a tax imposed on importing and exporting. The tariff is a tax imposed on the imported good, on the imported good to the receiving, from the receiving country. Okay, so the U.S. Requests tariffs from the manufacturer of China, right? From China, Chinese government and Chinese companies to pay taxes to have stuff shipped here. So that's D. So I don't think that'll be beneficial. So I think the only one that really fits here is B. Reason is the only one I see that is a benefit for both countries A and B and company A and B, even though they didn't really name it that way. The reason is when you're looking at a question like this, you want a benefit that's going to benefit all four parties, and only three of those weren't really any benefit. I didn't really see any benefits for any of them. B could have been better, right? There should be other actions, but that's a good start point, is offering tax incentives. Hopefully country A and B get something more than just, losing out on revenue, because obviously with no lower tax exemptions, the companies get to trade, they get a little discount, which is nice. They get a little commingling practice, and then country A and B, like I said in the thing, it's looking to build back relational ties. So I think this is a good method. moving on to question 24. A firm based in country A manufactures its products in country B and pays manufacturing employees in the currency in which they are located. Which currency situation will result in the maximum profit for the firm? A. The value of the currency in both countries stays the same. B. The value of the currency in both countries decreases. C. The currency in country A is weak relative to the currency in country B. And D. The currency in country A is strong relative to the currency in country B. Okay. Which currency situation will result in the maximum profit for the firm? Okay, so looking through the answers, A and B to me are out because when you're looking at global trade and currency denominations and currencies, you have to look at things as power ratios of each other. The currencies operate on independent economies of scale, and you gotta think those currencies are denominations of a nation's overall wealth and capital energy. So it's not just a one for one kind of thing. So the value of a currency in both countries stays the same, okay, is typically not what happens. Actually, values when measured against other currencies change all the time because of, again, the capital movement that's always happening. Money doesn't stay stagnant and balanced at all. Okay, so it's a collection of all the energies that get pumped into the economy: labor energy, time, technology, resources available, productive capacity, transaction volume, economic opportunity, growth. There's a lot of different things that go into it. It's a very dynamic organism, so it's not a fixed thing. So A's out. Same thing with B. The value of currency in both countries decreases. The value of the currency can decrease, but it's not based off of the economy necessarily. It has to do with more of the economic policies put in place by reserve banks and economic reserve banks and stuff at the government level of those economies. So that's out for this situation. Okay, so which currency situation will result in the maximum profit for the firm? So the firm is based in country A. Okay. And then it produces products in country B. So the situation that I can see that would work best for the firm would be one that generates the most profit, obviously. Okay, so it doesn't really give us context of where they're selling or shipping stuff. They're just having stuff manufactured. So we can imply that it's overseas and probably coming back. Okay. So how do you gain more money as a firm? There's literally two levers you can do. There's really one lever. There's a lot. Okay, excuse me. In simple terms, to be profitable, there's two levers that you can do as a company. You can, if you have a baseline start point, measure from there, and in order to move it up, money up, for to have money go up for overall, you have to beat your spend. Okay, so your profit is any leftover from your spend. Okay, so it doesn't really retain, it's not a measure on overall revenue. Revenue is a great indicator on productive capital that the company got achieved. But when you mention the word profit, it is just a simple calculation of, was money in more than money spent, okay, within the business. Okay, so simple, A minus B equals C. Okay, pretty self-explanatory. So there's, when it comes to currencies, a couple things can create that effect. A currency, if, let's say the firm is based here and they're getting sold here, that means these guys are manufacturing stuff here, even though they're tied to this company, A. Means their start point is here. If it is cheaper to manufacture here than it is here, these guys typically have a why would labor and manufacturing costs be more cheap over there? Is because it is cheaper. The power ratio, that means country A has a stronger denomination of value. We retain more of our value, of our superiority over a currency for labor and capital efficiency. Okay, so that's kind of the thing. How that measures up, it's hard to explain further, but when you're measuring the economic output, these guys, because they're manufacturing it for us and sending it here, hypothetically, we don't know really, but it is cheaper here. Otherwise, it would stay here, ideally, and just get sent out. If it wasn't cheaper here, right? They make it cheaper. They have lower energy costs. They have just all the different things I spoke about: labor, capital, people, resources, all those different things coalesce. But you're like, wouldn't that make it stronger? Not necessarily. A stronger currency makes you want to sell into the stronger currency, build and save costs in the weaker and sell in the stronger. Think because that it creates a more profit gap, creating that imbalance. It doesn't. You don't want to do weak to weak. You want to go weak to strong in that flow. I know I'm hitting the transcription button. And for those wondering, like, what does it mean to have a strong currency relative? Strength is, you got to think of, again, think of it like an energy. It has nothing to do with the denominated value. It has everything to do with the power ratio. Okay, if you think of things as a power of force, right? Why does a well-paying job, why does everyone chase a well-paying job? For instance, well, it's like, it gets me more money. That creates more purchasing power. More capital in the bank account creates more economic opportunity. But then you're like, well, what if all the prices raise, right? That's the weakening of the prices around in the economy of your out. That's why they say cost of living when it comes to certain economies. You'll hear this a lot. I live in California, right? People say, "Oh, California's cost of living standard is astronomical." It's like, I don't know necessarily for my frame of reference, but that is something that is said about my home state that I live in, right? And what does that mean? That's generally derived on, if I lived in San Francisco, my mortgage might be several more $1,000s a month because the housing costs are 5 times more than the house I have here. Okay, so that creates the prices create this loss of purchasing power. Okay, so no matter what my earnings are, prices relative to my earnings create a loss of purchasing power. And so that's what I mean when these questions relate to strong or relative weak or strong currencies. It's the same kind of economic principle. Is no matter what the value denomination number is how does the strength of purchasing power go to in relation to the other currencies. People say this a lot, that it's actually pretty cheap to live in Mexico, right? So a lot of families come here to work and then they send money back home. And you're like, well, why are you sending all your money over there? Like, well, I have family. And then money goes further there, right? So it's nice for people in that area because that's the money earned here has more purchasing power, more strength here. So that is the best kind of basic principle that I can explain to the layman if you guys are watching. Why is key question of why currency and purchasing power is so important is because when you measure things to everyone has a 24-hour clock, okay, and you understand that every human being has a singular 24-hour clock, 24 hours in the day for every single human being. So now we have a fixed amount of time. We all have a mystery clock diminishing to our death, and we all have a 24-hour day that gives us all fair amount of time of equal practice. And this creates this inspiration, this innate desire to live and create the most abundant economic and fruitful, beneficial thing that we can possibly achieve for our most scarce, precious resource, which is our time. So when we go to work and we transact, we want our money to mean something, and this is where this all comes together. Is we all want our money to last us longer in our lives, to go farther, to get us the things we want and desire, and for us to be just more fruitful and more plentiful and more sovereign and just more abundant and plentiful in our day-to-day lives. And so when we lose purchasing power, we absolutely hate it because because the full day of work of stressful labor that I had to go into and dig trenches or mow lawns or sweat in a desert, or if I was a school teacher or I was a bus driver, whatever business trade, a cold caller for a real estate agency or something, whatever hard work you've chosen to do, purchasing power matters because you want your life force time to mean something on the back end. And when you lose purchasing power, you are losing that time expenditure that was precious to you for that moment. All right, question 32. An individual is encouraged to provide a small, quiet fee to local officials to get some critical work done overseas for a global office. The individual was told that this would greatly expedite the work. The individual took that advice and the work was completed, but the manager in the United States was upset with the action and called the individual to discuss the matter. What is the most challenging aspect of this individual's ethical dilemma? Okay. So, this is interesting. So, this person paid some officials a little bit of money to get the work done a little bit faster. It doesn't seem like it was him who did the encouraged, but it just state is encouraged to provide. The individual was told that this would greatly expedite the work. The individual was told. Okay, so someone was encouraging him to do this in the area, and he took the advice, and the work was completed, but the manager had a problem with it. All right, so what's the problem? So A, unethical practices are common outside of the United States. Maybe. B, the manager is being influenced by personal perception of the ethics. C, the ethical actions observed in business are universal by human nature. And D, ethical behaviors are not standardized across the world. All right. So I would say, in my opinion, the most challenging aspect for this individual is that he's getting yelled at by his manager. Okay. For something he did in another country. I don't like the word summarized in A. I know this is a test, and I know they don't. I hope they really don't mean that. It's a horrible way to kind of frame it. Unethical practices are common everywhere. The United States is not a perfect entity. Okay, the fact that they stated that in a quiz is kind of kind of garbage, because some people will actually glom onto that and believe that. It's just not true. Not saying that it's bad, but there's good ethics out there in all countries. There's bad ethics out there, and it is what it is. It's the nature of the beast. So I'm not going to go with A. The manager is being influenced by personal perception of ethics. He is, and he's not wrong to do that. So B's is acceptable, but it's not the strongest opinion on this one. It's not the strongest answer. C, ethical actions observed in business are universal by human nature. No, false. Let's say you live out in a desert or a barren wasteland of an area doesn't have a really built out societal and economic system built out, and like relies heavily on bartering and things like that. So human nature, ethical behaviors are not very well universally understood. Okay, and it varies from person to person, place to place, nation to nation, tribe to tribe, group to group, team to team, all those different things. So no, religion to religion, even within religions, all internally, everything like that. So it's not, ethics is not evenly and universally understood across the board. So C is wrong. D, ethical behaviors are not standardized across the world. Yes, I would agree strongest with that one. Ethics and behaviors and standards may be, it's going to take different forms. Like I said, it's not universal. So we can also state that it's not standardized at all. So it's going to be different. Again, in a more rural place, ethical behaviors are going to be more transmitted verbally and going to be held differently based off of the consensus of the group. Okay, the larger the group, the more diverse of the opinions of the ethical behaviors and the ethical standard and how everyone what agrees upon. And then you may get to a point where it becomes written down and try to be transmuted to other people. But it is, again, it's not standardized, and it really becomes apparent when you travel. If you travel outside of your given nation, you will see drastically major opinions, communities, social behaviors, ethical behaviors across the board from people to people, varying depending on where they come from. So yes, that is the most true statement, is that ethical behaviors are not standardized throughout the world. Question 36. Which organizational structure helps increase employee creativity, productivity, and mutual accountability? A, teams, B, divisional, C, matrix, and D, departmental. Departmental and divisional are kind of the same thing. They're different. Even teams. Those are just different terms of breaking up different groups of people. So in the military, we had things broken down kind of like that. On like a ship, you had your division. Well, you had various things. So you had your upper chain of command. You had your whole ship, okay, and then you had various departments of the ship. So various departments would have been led up by officers and various department heads. So after the echelon, senior leadership would have been the department heads. Okay, there would have been, I believe, I almost said 4, but there's 5. So you had on the ship, you had maybe 6. You had operations department. You had admin, supply, engineering, combat systems, and weapons. Okay, so 7 departments. Engineering entailed and so 7 departments took over all major functions. Okay, so that broke it down to the major limbs and functions. Okay, then you had divisions that broke down departments into smaller organizations. So divisions would have been a more fine-tuned function of the department. So again, let's say a department such as operations on a ship entailed 2 different divisions. You had the operations division, which was head up by operations specialists for the Navy rates people. That's an OS. You also had the people that did cryptographic signaling process. They were part of that division. Then you also had the deck division, which was bosun's mates, undesignated seamen, that department. Admin had the major administrative office. You had the personnel specialist for pay. You had medical. You had dispersing in that department, and then supply. You had the supply office. You had the cooks, and you had dispersing also in there. Actually, no, excuse me. Dispersing was not part of admin. Dispersing was supply. Who else? Engineers entailed people that worked on toilets, to damage control specialists, essentially firefighters, to hull technicians, to people that worked on HVAC, the main engine for the ship, the power plant, the fuel, the everything, anything mechanical fell in heavily in engineering. You had electrical division in there. There's a lot of different departments in there, or divisions in there. Combat systems had fire control division. You had for weapons the electronics that fell into weapons. You had my department, which was a combat systems. We were the electronics technicians, so we were in charge of radar and electronic communications, the radios and stuff like that. So radar, radios, and the interior communications. You had another one that was the ITs fell into that division or department. Weapons was weapons department. So gunner's mates, fire controlmen that did actually maintenance on weapons and stuff like that. So those are all the major departments. And so, like I said, I just listed off all the divisions broken down to each individual department. Now, teams, we didn't utilize the word teams, but teams is another small entity of divisions. So you're going from 3 people to 10 people to maybe 30 people to an entire ship. So those are all the different functions of the same thing. So it's hard to say that that will increase creativity, productivity, and mutual accountability. So I think a matrix is, you can think of things differently. It's a more dynamic way of setting things up than those 3 first options I mentioned. All right, 54. A multinational company sources the components for its products from multiple countries around the globe and assembles the final finished product locally in the country of sale. However, the consumers in the local country do not prefer locally made goods. Which phenomenon is the company experiencing? A, mass customization effect. B, country of origin effect. C, value chain effect. And D, quality of localization effect. So I don't think this is mass customization effect. Not without going too in depth of what that term may mean. Having too many options to purchase from, I don't think seems to be what is going on in the context of this question. Value chain effect. The value chain is not essential, not even close to what is being described in this context. The value chain essentially is the process of creating and transmitting value from transaction to transaction. So this process is what allows people to be the intermediaries between transactions. Why do we have salesmen of things, for instance? A lot of times, right? They're not the end user, but there's someone in the middle. It's the reason we rely on this economically is because sometimes it's helpful to have people that get out there and bring necessary goods to a market and create value in this. And in order to do this, you have to transact these goods, not just like from one point to the other. And all these intermediate transactions are all process of creating a value chain. So a product may not be, from manufacturer to end user. The manufacturer doesn't need the good. The end user, the customer, wants it. But how many times how many people or companies or logistics people will it go to before it gets to the end customer? Those people are benefiting off of the supply and movement processes or the reselling. So it may get captured somewhere and get moved, sent back, and moved again. So this is called value chaining. And I don't think this one's process. So what is another example of a value chain? So think of like a real estate agent, right? They're not purchasing the house. They're not selling a lease. They're not part of the title agency. They're a person that gets a small commission for helping and assisting someone who wants to buy a house connect with a seller. So all those interconnected parties have their own extracted value from a singular transaction. So a buyer gets a home, distributes the economic wealth. The real estate agent who helped pair buyer to seller shares a commission with the selling agent. Sellers give over their home, get the money, the major chunk of the money. A lender will invest capital, institute a mortgage, and a title agency will collect on a fee for essentially legalizing that entire transaction. So that's a value chain, right? Not every one person is getting the same thing, but they're all benefiting from a singular transaction, from it going from one person to another. So this is the chaining effect. Quality of localization. So this one's similar to country of origin. So these two things I think are the closest two things that are explained in this context of the question. Quality of localization is kind of that thing of like, we kind of do it a lot in the States where we see too much stuff made from China and it's made cheaply in our mind. So some people are like, I want good, solid local stuff. I want my food sourced locally. So I'm gonna go to a fresher food grocery market, right? So they want to source it locally. So there's that perception of quality from that localization. I don't the reverse of that is happening here in this context. So it is the opposite of that. So country of origin effect is if there's a perception of poor quality from the locality, that would be the opposite. So I think a country of origin effect explains the reverse. Question 51. Human resources policies are determined by how a particular global company decides to oversee its diverse workforce. What is a disadvantage of using this polycentric approach? A. Staff members need an adjustment period to the new culture. B. It is possible there are dual demands for shared resources. C. There are less flexibility in adjusting to changing local conditions. And D. Decisions are made by the home office in the top-down approach. Ooh, a lot of different things to think through. What is a disadvantage of using this polycentric approach? So, human resources policies are determined by how a particular global company decides to oversee its diverse workforce. Determined by, I don't know if it doesn't really give much that's a horrible bit of context. Polycentric. So it's got multi options but multi central at the same time. So it's diverse and centralized is that polycentric kind of terminology definition. It's multiple, dynamic, but also centric and centralized. Okay, so a disadvantage to that approach. A can make sense a little bit. It's a little vague. Staff members need an adjustment period to a new culture. I mean, if the culture's new to the company, but if I can see that doesn't take a lot of time necessarily. I don't think it's a major disadvantage though. I think it's a soft disadvantage. Is it possible there's dual demands for shared resources? Yes, that is true. If you have a global company, it's gonna group everything together, so you're gonna have all these different legs vying for resources, which is gonna be the capital and labor control and decision making power within that entity. So that's a possibility. C, there's less flexibility in adjusting to the changing local conditions. Again, very, very vague based off of what we know about the polycentric approach and just a company that has a global company and how it just says it's human resources policies are determined by the geographic location. Decisions are made by a home office and a top-down approach. Typically, if this was like just a singular US-based company, but with a global reach, you're going to have a more this isn't viable typically. It's what I would assume would be the fallback, but I don't think people actually do that. I would say B makes the most sense to me, but I don't know if this is true. So give me a little bit of coaching critique for my thought process so far on this answer. What you doing? Exploring what? Life. Being nosy. I'm studying. All right. All right. So polycentric is each local office acts as its own mini company. This is how I was thinking it was working. I didn't think it would have a geocentric or a ethnocentric kind of approach. I didn't think it was going to be viable. So I didn't quite understand what that term meant. So they do mention a polycentric approach with each. So I think in the sense of the way I stated it, yeah, if each office is run by its own kind of office, now they're kind of dual operating. So it's inevitable that they're going to be competitive in nature of how they operate. And so being productive is now a kind of a competition scheme. So yeah, you may have like an overhead authority, but if they're independent of the operations, but they are aware of each other, there's going to be an innate to be competitive. So I can see multiple demands of resources emerging being a problem, since they're already being self-run. So there's no, I don't think there would be as many problems with the HR policies per se. The HR policies would be diverse, but if you like brought them to another office, but it would make sense. The HR policies would be the best practice. I would assume the best practices for that region of how they operate. All right, 59. A manufacturing company in the United States acquired a small regional supplier based in California. Which accounting method should the company use to record the acquisition? A. Financial accounting reporting standards. B. International financial reporting standards. C. Generally accepted accounting principles. And D. General international accounting principles. I think I did this answer on another study session. I think it is because it is a company that is transacting from within the United States and it's not going outside, you want to remove the acronym parts that refer to the international portions. So B and D are out. Financial accounting reporting standards. Okay. So financial and accounting are two different sides of some a very similar coin. Financial financing and financial things, or like looking into it, are essentially forward projection. It's the forward projection side of economics. Accounting is the after transaction part of economics. So you have that line. So accounting is the post transaction. So from the point of the transaction, financial is before all that. So before the money is made. Okay. That's the kind of the simplest baseline I can come up with. That goes more in depth than that. You'll see a very, very financial accounting and just basic accounting can look very, very similar. They can look very, very similar, but their scope is so farly different. Financial stuff is where you start talking about forward projection measurements, job reports, economic strength, forward-looking indicators in markets and stuff like that. That's financial analysis in a nutshell. Now, accounting analysis is all the stuff, the meat and potatoes of, okay, what did a company do to earn its money, and how much did it cost, and did we have a record of it? So the process of recording everything that looked at it, and then they look at the profit and loss of the overall. But it can't do that until. So accounting does report to financial to help create opportunities for more revenue, but accounting doesn't do any forward projection. They just take receipts and create data sets out of those receipts, and it's up to other financial analysts to look at historical trends based off of past patterns and then project that into forward-thinking models. So A is out. So generally accepted accounting principles would be the thing that applies to this specific question, since we're looking for an accounting method, and it's specifically focusing on the United States and within the United States. Give me a second.